Hi guys, I am your Dhakshi teacher. Today I am here to teach business studies for grade 9 students. Today we are going to do chapter number 29, statement of comprehensive income. What do you mean by statement of comprehensive income? Why are we preparing statement of comprehensive income? We prepare statement of comprehensive income to show the income or the profit of the business. To show the profit or the income of the business. Earlier this income statement is known as the income statement. Now we say it as statement of comprehensive income. Earlier we call it as income statement. Now we call it as statement of comprehensive income. We prepare statement of comprehensive income to identify the performance of the business, how well the business performs, what is the profit for the year, what is the loss that they are going on. So to understand the profit and losses, we prepare the income statement. So we calculate the two most important profits. First one is gross profit, the other one is operating profit. What do you mean by gross profit? Gross profit is the income that you earn. So we take the sales income, we minus the cost of sales. What do you mean by cost of sales? The cost of the all purchases. So we calculate opening stocks plus purchase minus closing stock, you get the cost of sales. Opening stock plus purchase minus closing stocks, you get the cost of sales. So if you said minus the difference between the revenue and the cost of sales, you get the gross profit. Then the gross profit, from the gross you minus all the expenses, we get the net profit, or we call it as operating profit. So we have administrative expense, selling and distribution expense, and other operating expenses. What do you mean by administrative expenses? These are the general overheads of the business. Example, building rent, insurance, telephone charges. All this comes under the administrative expenses. Selling and distribution expenses are related to the promotions of the products, advertisements expense, marketing manager's salary, everything comes under the selling and distribution expenses. And the other operating expenses are the expense which you can't classify it under the above two category, you put it under the other operating expenses. Then we calculate the operating profit. How to calculate? You get the gross profit, you add every administrative, distribution and other operating expenses, you get the total, you get the difference between the gross profit and the operating profit. For example, gross profit is 8,000 here. So what do? You add 5, 3, 1, that is 500, 300 and 100. So it's 5, 3, 1, it's 900, right? It's 900. So what do you minus 8,000 minus 900, you get the difference as 7,100. That we call as operating profit. Then we have the finance cost. What is meant by finance cost of the business? If we are paying any interest to the bank, that we call as finance cost. And if finance cost, always we minus it. That's why I included a bracket. So which are in the bracket, we have to minus. And the finance income is the income that we get for any deposits in the bank. Finance cost is the interest that we pay for the bank loans or any overdraft facilities. And finance income is the income that the bank pays to us. Then we calculate the profit for the year. What we do is we take the operating profit, we minus the finance cost. If there is a finance income, we add that to the operating profit. Then we get the profit for the year. Then if there is a taxation, if you are a sole trader, you are paying the income tax. If there is a partnership, also it comes under the income tax. And if it's a corporate, if you have a company, it comes under the cooperative tax. So we go for the cooperative tax. We minus the tax, you get the final answer as profit after tax. So this is that profit that belongs to the owner. So this profit can be a distributed profit or retained profit. What do you mean by retained profit and distributed profit? Distributed profit is the profit, the final answer you get here, if it is divided among the owners or the shareholders of the business, that we call as distributed profit. If it is not distributed, if they store it for the future purposes, we call as retained profit. What do you mean by future purposes? What are the purpose business have in future? It can be for their investment. It can be their research and development. If they store that money for those purposes, we call that as retained profits. If they distributed the profit among the owners or the shareholders like dividends or the profit shares, then we call as distributed profit. So what are the users of prepare this income statement? First, the users to the business is they can make investment decision in which company to invest, how much to invest. If they invest, what is the profit percentage they will get. So we get the investment decisions by using the income statement. Then we can analyze the cost. How to analyze cost? The cost part is analyzed here. When the cost of sales increases, our profit decreases. So what will happen? We have to do a cost analysis, right? So when the cost of sales is increasing, we will be identifying in the income statement. So it helps us to reduce our cost of production. Then it lies as a basis for future forecast. What is meant by future forecast? By keeping an income statement and seeing a profit, we can predict about that business. It can be a multinational or local business. We can predict how they are going to perform in the following year. Are we going to invest in their business? Are we going to buy in their shares? So it lies as a future forecast. We see how they perform in the future. Next, to compare. When buying shares, we don't just go and buy. We compare with the same industry businesses. For an example, if you are going to invest in Coca-Cola company, you just see with the Elephant House company as well, because they are all beverages companies. So when their share prices are increasing, that means if they are having a more profit, then only we go and invest. So we always check with their income statements. It's available in their annual accounts. It's available at AGM. What is AGM? It's annual general meeting. So it lies as a basis to compare with other companies as well. I'll just give a summary again. It's a statement of income statements. We calculate gross profit and the operating profit. Gross profit is the difference between the sales revenue and the cost of sale. Here we identify the cost of business. And in operating profit, after all the expenses, what is the remaining money that we have? And then we have the profit for the year, that is after our finance income or finance cost. If the bank is paying us money, that is finance income. If we are paying money to the bank, that is we are calling it finance cost. Then we have the profit after tax and the profit before tax. If you minus the profit, then we call that amount as profit after tax. If it is before tax, then we call as profit before tax. Then why we use this? To make investment decision, for the cost analysis, to compare with other companies, and to predict how the business perform in future. So I hope you all are watching these videos and you all understood all these lessons. God bless you all.